Hi everybody and good evening. I trust you can all hear me loud and clear. We've made sure that we have very much improved our audio and all our connections. So thanks very much for joining me this evening, and thanks for sending those messages through that you can indeed hear me very much loud and clear. And you can see the screen, and what I'm going to do this evening is give you what I make myself a promise every time I do a broadcast, whether it's on Bloomberg or BBC or whatever, or I do a webinar. It has to be my best one ever. And I know that sounds a little bit like a cliche or whatever, but basically if it's not the best one that I've ever done, then there's not much point doing it, and it gets pretty boring for me, let alone for anybody else. So this one has got to be the best webinar that I've ever done, and I really think it is. There's a whole lot of content I spent yesterday and the weekend adding in, especially off the back of feedback I've had from people where they want to know extra things. I had a message just now saying, when are you going to talk about equities as opposed to currencies? Well, this is the one. I'm only going to be talking about equities on this, and about the FTSE index and about the Dow as well, as opposed to about currencies. So I hope that's going to please a heck of a lot of people, because that's really what people have been dying to hear about. I'm also seeing one or two people asking me about things like the Cyprus effect. Yes, indeed, I'm going to talk about that this evening. So what I want you to do is get comfortable, get a pen and paper, sit back, get a drink actually, even if you wish, and get ready for not just my thoughts, but actually the collective thoughts of some of the biggest names in the industry, which I've distilled for you. And the idea is that, as I always say, it should be the best 1.5 hours you're going to spend about the markets, divided into two parts. The first part is going to be my view on the markets. The second part is going to be how I pick accurately buy and sell signals for equities and indices. So let me start with the high risk investment warning. You've seen that. This is actually the risk management warning I should give you. Some of you who've been to my talks will have seen me mention this before. To be honest, if you don't realize how risky things are after Lehman Brothers and Bear Stearns and Cyprus, then we've all got problems if we don't realize how big it is. If anything, we should actually probably be, by the looks of it, given what's happened in Cyprus, at 3 a.m. last night, I was up watching the news as the bail-in, bail-out, call it what you want, happened. We should probably all be taking more risk as well. I just got a question come in, most question I'm going to answer later, about precious metals and gold and silver. I'm going to do a separate one about that. I believe it's going to be next week, but I'll make sure everybody's emailed about my gold and silver dedicated presentation. And this is what's going to happen. This is my current view. I'll explain how I get these arrows. These are my buy and sell signals that come up on my own system. I'll explain that a little bit later. This is the FTSE 100 1-hour chart, basically up until earlier today. And at the moment, on the 1-hour chart, I didn't have a buy or sell signal immediately, right bang up to the start of this. What I have got, as you can see, is a sell signal, which, and I'll explain how these came about. This is the FTSE 100 charts. Each one of these 1-hour charts, each one of these bars is an hour, and I'm going to go through this tonight. I had a sell signal there, and then an exit, and then another sell signal here, and then an exit. So I'll also explain how I come to get these signals, and but more importantly, I want to just give you my view on the FTSE in the 1-hourly chart. I don't really have a long or short perspective at bang as I speak. But what about a slightly longer term perspective? Well, that's what I'm going to give you. Part one is where I see the markets going. Part two, why I'm accurate. As I said earlier, where do I get my information from, as well as my own analysis? These are the sources of information that I use: Goldman Sachs, Bloomberg, of course, Coutts, and Edmund de Rothschild, for whom I'll be speaking in Luxembourg in June, I think it is, this year. It's the 2013 conference. You see the 2012 one they did over there. So a lot of, and of course Deutsche Bank and a whole load of others, but I'm going to distill all of that, plus most importantly my own analysis for you. So as I say, it should be the most effective time that you spend. Some of you will have seen me give these charts. I'm going to mix one or two of my older, more important slides, older as I say in a week old slides, with about 100 new ones that I've got this evening for you. So why are the markets so strong? And I remain strong on the FTSE 100 as well as the US markets, and this is for the US. Earnings have beaten expectations, and they're going to continue beating expectations because expectations are so low. People have also asking me individual stocks, which are my best buy and sells. I'm going to give you those, and I'm going to name names and why they are as well. So I'm looking forward to that a little bit later on. Earnings are beating expectations because expectations are low, and expectations are low. Maybe it's the media, maybe it's just that we're generally pessimistic. But the reason I say maybe we're pessimistic, maybe it's the media, is because on the flip side, earnings are beating expectations. They're beating expectations because there's profits being made. There's a real profits made by real companies out there. Now, I don't have to be bullish on the markets. I can make money just as easily from being negative as I can from being positive. So I'm only telling you it the way that I see it. And I see it at the moment that earnings are going to continue beating expectations. And the reason they're going to continue beating expectations is, as you can see from the Cyprus affair, expectations are going to remain low. That's perversely a good thing. Cyprus has turned out to be a good thing because it's beaten down expectations, which means as we have a low hurdle to jump over for earnings, we will continue seeing the markets rising higher. And that is actually pretty good stuff. Now, of course, earnings can be manipulated, and of course cash is king, and they say revenue is vanity and profits are ego, and cash is what is king. But regardless of all of that, and I might be worried about those things if I'm looking to own a company, but if I'm looking just to trade its shares and think about which direction the broader market's going in, then I'm going to be concerned whether or not everybody else is of the view that earnings will continue beating expectations, and what we're seeing at the moment, that's going to happen. And let me name some names before I go back to the FTSE 100 index and the Dow index and give you specific equities at the moment and which ones look interesting. Now, I'm going to explain the MACD later on, the MACD, which is one of the ones that I rely upon. Here, I'm expecting, for instance, Thomas Cook, and you'd think, surely not. Why would I expect Thomas Cook to continue up? Well, you can see an obvious target that I've got in mind for it, which is going to take some time. It's not going to be a straightforward move straight up to there. And these are the 1 month bars, don't forget. Each one of these bars here represents a whole month, so it's going to take a while. But that one came up on my radar because of the upward trend, because of the momentum indicator, which I'll explain in the second part and how I interpret it and use it. Another one which definitely was looking attractive to me in terms of the momentum indicator. Now, some people say to me, well, wait a minute, it's above the zero line. And as I say, I'll explain all of this later. But I tend to look at the strength at which something is rising and the broader trend and how long that trend has been continuing. So this is another one. Timelines. People will say, well, how long are you looking at these ones, these names for? This would be, at least these would be from about 4 to 8 months going forward, if not longer, as long as these trends that you're already seeing in place remain intact. Hikma Pharmaceutical, another one familiar to many of you for similar reasons. One of the other aspects that I look at when I look at these equities is not just the technicals. I mix that up with my valuation and growth. And when it comes to valuation, there's a whole number of things that I look at, examine, not just price earnings and price earnings growth ratios, but also where I can, and I have the data, discount cash flows, so future cash flows discounted to the present net value. Now, I won't go into the technicalities of that for the moment. Suffice it to say, it's an incredibly accurate way, and I will be doing future courses teaching people on that. It's how I predicted on BBC, for the BBC, that Facebook would decline 50% in value after the IPO, because I just looked at the projected discounted cash flows. It's something which we learn in my private equity firm, because we use that approach to get to valuations. But as I'll do separate webinars on things like that. For the moment, just know that I've looked at valuations on price earnings growth, and discounted cash flows, and I look at growth based on revenue growth, earnings growth year on year, and dividend yields as well to look at income generation. And 8 out of 10 means that this is one of the companies, given its technicals as well, that also came up on my radar. Travis Perkins, doesn't take a genius to work out why that's been recently boosted. And that's because of what the Chancellor said last week in the budget on house building and providing extra loans for not just first-time buyers, but second and third-time buyers, and also for people who were not just new to the ladder, but also were probably, and they're clarifying this, buying more than just one home, so buying maybe a second home, and people who already owned homes. So obviously you'd expect Travis Perkins to do increasingly better over there. Persimmon, similar kind of reason, house builder, of course. And of course they've been doing really well for a long time now, but that momentum indicator gives me the reassurance, as does my valuations and growth. B-Sky B as well. You know, they look like the only game in town. I've seen all the adverts from Virgin and so on, but this market is really growing. It takes a while sometimes for things like this, and this company's been around for donkeys, of course, decades in actual fact. Yet it takes time. I see that going up, and I see this being an obvious play on it as well. And again, value growth on Premier Oil right up there. The obvious target to go for is the recent high, which was in 2011. I'd expect this to turn around and go that way. I expect the stochastic. As I said, I'll explain the momentum indicators as we continue. It's vital you understand how those work. But for now, I just want to whet your appetite with specific names. Savills as well. Now, partly because its money is earned from the high end of the market, not just in the UK, but globally, and that market is buoyant. You're taking a bet on rich people getting richer around the world, and that's one of the best bets you can take at the moment. But not only that, value growth is up. Why is the valuations up? Because prices have been beaten down by low expectations about global growth. Why is the growth year-on-year earnings and revenues on this up? Well, because rich people are getting richer. And again, I'd expect this trend to be continuing. 4 to 8 month outlook for these, as long as these trends continue. Whoops, jump one. Berenstain over there, similar kind of reasoning. You can see which direction I'm looking at. You can see value growth. Okay, Computer Center. Similar kind of reasoning. I don't need to keep on spelling it out every single time there for you. Of course, if you're really worried and you don't want to go with the ones that I like, then what I do sometimes show people is what Warren Buffett owns. This is what he owns, and those are the names. Some of them you'll recognize. He's owned them for a heck of a long time in the case of most of them. I'm not necessarily saying you should do that. I just thought it'd be interesting for people actually to see his portfolio. Let's get back to what I think is going to happen with the FTSE 100. I seriously think 7,000 is on the cards for this year. Now you might, well, you're crazy, Alpesh, with Cyprus and everything else going on. Remember what I said. Yes, those things depress prices for a while. They depress our expectations for a while. But really what really happens with these things is in actual fact earnings. People are just working hard to get a profit, and when they do, the share prices move up. So my overall bias is upwards. Now, I've mentioned specific stock names. I mentioned my overall bias is up. I've still got to show you how to pick exact entry and exit points. That's actually the missing link. Before I do that, I said I'd give you more names. Well, again, based on my analysis of value, which is price earnings growth, and cash flows, and growth, revenue growth, earnings growth, and income dividend yields, these names on my list of 13. Now, I expect as a portfolio, as a whole, right, this to rise about 20% over the next 12 months. Next 12 months, not up to the end of December, next 12 months, up 20% as a whole, with the rule that should any one stock individually fall 25%, you would sell it, and you would hold cash in that portfolio. Any of these, now you might say, well, wait a minute, Alpesh, some of these have gone up stonking amounts, as indeed they have. So be it. They have, and so be it. So over the next 12 months, I expect this portfolio as a whole to go up 20%. If any one individually falls 25%, you would sell it. By the way, that gives you a really good stop loss, because you're dividing all your money into 1/13, because there's 13 here. So in any one stock, you'll only have 1/13, And the most you could lose on any one, is that times 25 over 100, or 25% of 113, which overall, relative to your entire portfolio, means you're going to lose at most on any one stock, just under 2% is the most you could lose of your entire portfolio. If you put all your risk capital, most you could ever lose overall is 2% on any one security. Of course, if they all fell 25%, which would be highly unusual, you'd be down 25% as a whole, but that would be unlikely. If any one of these was to fall to its stop loss of 25% from entry, you would lose 2%. It's just a simple rule. It's just a simple way of looking at stocks based on value growth income and a simple portfolio. I'm not saying you need to do it. I'm just saying that that's what I'm one of the sort of simpler ways of building a portfolio. And in my experience, when I look at my criteria for value, growth, and income, and I look at stocks which fall in a subset of all these three criteria, so something which is relatively undervalued, showing good growth and good income, then as a portfolio as a whole, I couldn't tell you, if I could, I would tell you which one of these will be the best performers, which will be the worst performer. That's why we have a portfolio. But I just want to give those names out there, and they've come up on that. But what I actually want to do this evening, because it's all very well just giving you names, and people always want names, is actually to teach you probably some of the most important aspects of how to pick, buy, and sell entries. Now, I created about 100 extra slides on this based on what people have asked me to concentrate on, what they've asked me to answer. So I'm going to do that for you this evening in the second part of the presentation. And then I'm going to answer some of your questions as well about the markets more broadly at the end of that too as well. And we'll go through all of this material. So let's go through some of these key points which lots of people have asked me about, and I say I want to give you the best presentation I've ever given and give you the best insight that I've ever given. So here we go. Let's get right into it. What do top traders do? Really simple. It's ABC. Okay, we get money management right. So I'm going to teach you some of the best money management techniques of the best traders in the world. I'm going to name names of who the best traders are. So it's not just me saying, oh, this is what I do. I will tell you what I do as well. Trading system. They've got a trading system. Obviously, they have on when to buy, when to sell. So I better show you that and give you the essence of all good trading systems, but more importantly, how you evaluate them all. Really straightforward. How do you evaluate your own one or mine, which I'm going to give you? How do you evaluate it? I'm going to show you how you evaluate the trading system in 3 easy steps, ABC. How do you evaluate it? And C, trading psychology. There's a lot to do with trading psychology. If you get all 3 right, you get profit. And I'm going to focus this evening on those things. I'll give you an example, recent. This is the FTSE 100 minute-by-minute chart this afternoon. Okay, this is my buy and sell signals. I'll explain these later and how I generate them and how you can. So that's the entry, that's the exit, and it was today, as you can see. Entry 64.56, exit 64.31. Okay, spread of 24 points, £25 per point, say 600 pounds, time in 1.5 hours. Okay, so what we need to know is how do we do that? That's fresh off the, what can I say, fresh off the screen really, because it was as recent as today. So what tonight's about is making money basically as easy as ABC, based on so much feedback that I've had from people. So I know which slides to focus on, which areas you'll most want to know about, as well as what I know is the most important. And these are basically, if I was to summarize it in the words of my listeners and viewers and readers, what they're asking for, then effectively this is it. I basically want you to trade like a pro, even if you're new to this. I want you to know what that trading should be as easy as ABC. I want you to learn how to sustain long-term profits. I want you to understand exactly, precisely how and when to trade. You should have a way of killing your loss-making trades. I want to show you how I turned loss-making apprentices into profitable traders, to do with the equities, to do with indices. Today's all about indices. And I want you to have my best trading methods, and those are the world's leading traders, proven and published by the FT in my column in that newspaper as well. So we want to get down to that. So what are you going to learn? Make sure you're not one of the 80% who end up losing money. Why people lose 50% of their money trading in just 1 year. We found so many who fitted that profile when we spoke to brokers. How to make trading stress-free, because remember I told you so much is about psychology. Be certain in all your trading decisions, how not to get ripped off by experts and automated trading robots and all that, and be profitable from day one. So let me give you, again, FTSE 100, an example of the kinds of trades we need to be able to get right. Okay, this is the 5-minute chart. M5 means 5 minutes, and I'll go through all of this as we progress as well. And I'm not just going to show you the hourly or 5-minute, I'm also going to give you longer term as well. Remember the stocks that I mentioned, those 13 stocks, those were 12-month holding periods. I'm also going to show you not just 5-minute and hourly, because people have got day jobs, how to look at daily charts, how to look at weekly, and how to fit this into a day job or when you come home from work, how to fit it in so that you know you can still do some trades and how you do that. So I will go through all of that as well, not just short term. I'm just showing you short term because it so happens if you are in front of your computer, and don't forget these are FTSE 100, so these are open even after working out or daily working hours that people have 9 till 5. So you can place these charts in the evening, and there you would want to do a 5-minute or a 1-minute chart because you don't want to be waiting because you're going to be sitting in front of a computer screen. So what we need to know is how do we get those 41 or 39 points after bid-ask spread? How do we get that £975 profit in the 5 hours that it took on the 13th of March all the way later in that day that we capture these kinds of trends? How's that done? And that's what we're going to talk about. Let me just give you a bit of briefing on how all this came about for me as a journey. I saw this film when I was about 12 years old, and I love the idea that somebody could be taught how to trade, because that's what happens in this film. The Dan Aykroyd character teaches the Eddie Murphy character to trade, and I thought, being 12, this is a good idea. This caught my imagination. Of course, years later, I realized this had happened in real life. Richard Dennis, and I'm not going to talk about the turtles for those of you who know it is much, if at all, so don't think it's a turtles thing. But he put an advert in a newspaper where he basically said he wanted people, he wanted to teach people to trade, and it was a bet that he did with a friend that you could teach people to trade. Here it is, October 1st, 1984, as you can tell. And this is a real advert, and Richard Dennis is one of the great legends in hedge fund management, and virtually, if not all of his turtles, all the people he taught, became multimillionaires. So I realized years later that, of course, this had happened in real life. What had caught my imagination with the markets had happened, and I know it can be taught, and I want to teach people how to do it. One of the things that I also want to get across to people is how, because one of the questions that come up, how do you make effective use of your time? Because there's no point sitting in front of a computer screen for hours on end if you're not going to make more than a few pounds. You might as well work at McDonald's. Equally, if you're going to have to spend hours and hours and yet you have lots and lots of money, then that's not going to be good enough either. So I'm going to look at how many pips we should be looking to capture in a week, and then we work out whether it's worth it given our starting capital. So don't worry, I'm going to do that calculation. Not only that, I also want to get across to at what point do you stop analyzing and start trading as well, because that's one of the questions which has come up, and I'll make it very clear, because that's part of not being stressful and making money. We need to be making money. We need to be making a return on our time. So let me get through that as well. So here's an example of another winning trade that I've got to show you how to do, because we would agree that depending on what our starting capital is, what we need to know is, well, how do you get to £40 a point? Why? So I've got to teach you why did we get to £40 a point, because for some of us, that's not enough money. For others, that's fantastic. In fact, for some, that's great for the rest of the year. I'm done as my second income, £6,000 in 30 days. Don't need to do another trade for the whole of the year. Not greedy. Don't want to do it. What we really need to know is, how did we get that entry there? How do we get that exit over there? And that's what I've got to teach you. And not just that. Remember, it's also about money management. So how do we decide on that figure? That's £40 a point. And remember, this is a 4-hourly chart now. So this is the kind of trade where you might have placed it on the after work on the 17th, and then you exited it on the 30th. So you can see how It didn't necessarily need to be watching the screen constantly. All we do is adjust the time frame in order to fit into our workload. If we're going to be sitting in front of the screen, we have a small time frame. If we're not really going to have much time. We have a longer time frame. But we do need to manage logistics of how do I know when I'm to buy and sell as well. So some of you will have seen some of the screens where I talk about who I am and my background, but like I said, I've got about 100 new screens on this, and we're just talking equity. So let me whiz through who I am for those who've not heard it, and a good reminder for the rest of you. It's very important that for the message to sink in, you know your credentials of your messenger. Those are all the books I've written. My background from barrister to asset manager to writing a column I was asked to write for the Financial Times. I've written 200 columns there. My publisher is the Financial Times, and I've presented for Bloomberg as an in-house presenter, paid presenter, I should say, not just as a guest. And now for the British government, I'm what's called a deal maker, looking for outstanding companies to bring to the United Kingdom as well. That all meant that I, somewhere along the line, learned how to communicate trading strategies to people, communicate it well enough, like all of these books, which were very good at communicating, to get to number 5, just ahead of Harry Potter and the Chamber of Secrets. So I must have been doing something right at that point. Years on, after all of this background of teaching and having set up my firm, I found my goal, which was to make sure I could trade, to have a systematic approach to trading. You can see the entry there where we entered. You can see the exit where we got out. And you can see how many pips, and you can see how long it took. This was the 5-minute chart because I knew I was going to be in front of the screen, and therefore it wasn't going to be a problem around 7 in the morning until about 10:30. So that's not really a big issue there. Okay. So how do we do all of this? Well, that's my office, and from there and this is an older photo of when I had hair, or more of it, and from there I access all these places: New York Stock Exchange, NASDAQ, and of course the UK markets. Areas of expertise being as a trading expert and educator for entities such as, that's me over there, London Stock Exchange, and so on. Okay, clients of my company and my trading strategies who want me to talk about my trading strategies are these companies. Paid clients, past and present, are these. And of course, you'll have seen me. I should explain, I am not the Indian billionaire referred to in that title. I love this screen caption. I'm actually talking about Mr. Lakshmi Mittal. So you'll have seen me on all these channels, just wanted to make sure. And that's when I was asked to present shows on the markets as well for Bloomberg for 3 years. I do that on Tuesdays and Wednesdays and take my computer in, and I was allowed to trade from a desk where I've been provided access to my Bloomberg, and so it's fantastic. And CNBC occasionally co-host. Some of you, as I say, have heard this, but bear with me because, as I say, I've got about 80 new slides coming up. Broadcasting on all major financial channels, and as an industry expert, asked not just to comment on where I think the market's going, but also on things like bankers as well. That as well. I should say, with all the trades that I've shown you, it can be done as, and I will go into this, CFDs or spread bets or in the futures market. It doesn't really matter how you place the trade, and many people prefer spread bets. So I'll come to that, but that's the great thing about it. And of course, we're talking about global markets, and therefore it helps to be globally respected, including appearing on Al Jazeera. All this led to the Financial Times calling me their top FTSE 100 forecaster. So it's good that I'm speaking to you about the FTSE 100 today. And I was ranked number 1 out of them in an open competition, ahead of all the others, and you can see that over there. And that's some of the know-how. How did I outperform everyone else? I forecast the FTSE over a 1-year period, and my error points were 23. I was out by 23. As you can see, the people at the bottom were out by 3,300. I've done about 200 columns plus on the FTSE, on investing in the FT. So you can sort of, I want to teach you that stuff. And the first thing that allowed that, the secret as it were, to being that accurate was having a system, and I'm going to tell you what that system is, and I'll show you this again. UK, this is a different chart, UK 5-minute going up to the 15th of March. So what we need to know is how do we get that? How, and this could be, as I say, a spread bet. It could be anything else, futures or a CFD trade. How do we get that entry and exit so we can short the market, make that profit? In this case, it was £40 a pip. How do we know that it should be £40? How do we know how much we should trade? And this is if we did not add to the winning position. One of the things I'm going to teach you about money and risk management in this presentation, because a lot of people have asked me about this, is how do we not just find some good trades like this, but how do we actually make even more when we do get on the back of a good trend? Well, the way we do it is I'm going to have to show you exactly how do you know when to add to these positions. Because obviously if you find a good trend, you don't just sit back and say, oh, God, yeah, that was a good one. I'm going to treat it just the same way as one which is going nowhere, one which is just going sideways, one which is giving me a short loss. Because of course there's going to be losses. Oh, I'll just treat it the same way. I've done all the hard work, but I'll just sit back. No, we've got to, when we see something moving down as fast as we do there, we want to look to get off on the back of that. How do we capture these moves so that we add to our initial position but protect our risk in case the market shoots up? When we do find one of these trends, when we are lucky enough to find a good one on the way down, because in actual fact, that's not how much you make. I've just put this down as how much is made following the system I'm going to show you if all you did was buy and sell. What if you increased your positions, you added to your winning positions? You should be looking at increasing that between 50 to 100%. Obviously you should. Look at the smoothness of that trend moving lower. Of course you should. And of course I've got to show you how to do that. So I want you to bear that in mind with all the charts that I show you, that actually the actual realized profits from this were greater than that by a factor of 50 to 100% more, as you would of course rightly expect. I've also been fortunate enough to be, as I say, published by the Financial Times, and this book, The Mind of a Trader, which is my book on trading psychology really, as well as systems. I had the chairman, amongst others, say, quote, that I really did elucidate the trading strategies and methodologies of successful traders and successful traders on the Chicago Board of Trade, which is the world's largest derivatives exchange. And that was quite a compliment. And the reason I wrote this book is I knew when I left the bar, because I trained as a barrister, to trade full time, that I better go and meet some of these traders. So I've been lucky enough also to have commendation from people like the head currency trader at Salomon Brothers and huge hedge fund managers like Bernard Opity, who manages now a $2 billion fund as well, and the chairman of LIFE, the London International Financial Futures and Options Exchange there as well. So I want to get that. The strategy I'm going to show you tonight is just basically one of, it's an amalgamation of the best of things that I've learned from everybody. And to the extent that I am now asked by all of these entities to speak to them. Now, I'm not saying this to brag. It's a video conference. I can't even see my audience, so there's not much point bragging to a computer screen. It's to make sure that people understand the importance of a message is also based on the messenger. Otherwise, you'll ignore it. You know, you're going to ignore it if you think, oh, I don't know, who's this Alpesh Patel? What's the point? Also, it then led on to my setting up an asset management company, and that asset management company has been asked by all these entities to participate in various conferences and shape the industry, as it were. So you can see some of those names that you'll recognize over there, and write also for Barclays Smart Investor and give my analysis and views on the markets, as you'd expect. And also you can see there for the Investor Magazine, stock picks continue to outperform and now show gains of 30%. That's my picks. So more than happy to stick my neck on the line, as it were, and also stick my name on the front cover of the magazine, as you can see over there and over there. I try not to have an ego about these things, but it does feel nice. But more importantly, your neck is on the block. You've got to be right. If you're not right, that's it. You're dead. You're either right or you're dead in this industry. So, I say, the secret weapon of accuracy was my system. I'm going to give you the rules. They're pretty straightforward. I want people to know this, and that's been behind all these articles, all these books, was not to keep it ever a secret. Otherwise, what's the point? I wouldn't write any of this stuff, and there's no harm to me in publicizing it. So there, how do we get that entry? How do we get in at those points, capture trends like that, and capture these exits like that? As I say, that led me, that accuracy using such mechanisms led to the likes of Merrill Lynch, HSBC to brand with me and enhance their brand, bring people to them and edit magazines, as well as I say, 200 columns in the Financial Times and global following from 73 countries around the world, and it's a map, most of them obviously from the United Kingdom. And an inventor of trading software, as you can see there as well, and created my own FSA regulated white label and then sold it as well. Of course, just in case you think there is a huge ego, I created this just in case. So there you see what my friends think I do, which is just talk a lot about the markets, what my mum thinks I do, which is sit in front, work really hard in front of lots of screens, of course what society and my ex-wife probably believe I do, what my investors think I do, Albert Einstein, what I think I do, of course saving the world, and what I actually probably end up doing, you know, and we all do, so I want you to know, we all do, which is I miss that great trade now and again. It's not all 100% accuracy. I want to talk to you about my favorite type of trading, which is momentum trading. And how did I exactly get to this stage? Well, you know, started off like most people, including, and I thought I'd give you an Olympic parallel because it's the most easiest to understand, as a one-man band. So you do it on your own initially, and then eventually you set up a firm, as I have done, and this is where our office is located in Mayfair, and you set up an asset management company to enable other people to succeed, just as Mr. Coe eventually stopped being a one-man band and helped a hell of a lot of other people earn gold, and that's my job. Or as all of these people have when they wrote their books and became dragons. Is you basically get your success by helping others succeed, or as this man has, help others succeed by making them your apprentices, and that's what I'm doing. So I know this stuff can be learned, and I want people to learn because I know it can be learned because I did it. Now let's look at two trades here. Let's look at this one first, and you can see the entry point, which I've marked 64.53, the exit 64.91, pips after spread about 37, roughly up here, and that's if we exclude adding to winning positions. Profit at £40 per point. This is the FTSE 100 5-minute chart. Time 5 hours, about 14.80, but it wasn't. It was more than that because we were obviously going to add it. And how do we know when to add? It's all very well when you think, add. But so how do you know when to add and when not to, and when to get out, and so on, so that you increase that to get that up to closer to 2,000 if you're doing £40 a pip on this. How does that actually work then? And it's not all just as simple as this. I've shown you some of the simpler ones, which were the winning ones that happened. But what about the others? Well, we don't win them all. Look at this. We got in there and we got out here. We lost a few pips. Okay, not too many, thankfully. You don't win them all. So I want you to know that. How do we make sure that that loss is pretty small, actually? How did that happen? That's what I've got to talk to you about. Before I give you the exact trading rules, let me just, again, I've added probably about another 75 new slides to go, but let me give you my journey quickly to success for those who haven't come across it. So strategy is not a problem. That's me playing chess at the age of 6. Putting this into computers is not a problem because at the age of 9 I had my Tandy TRS-80, so I was familiar with that. But I didn't want to do a paper round. That's why I started investing in the markets. Borrowed £100 from my aunt and bought some bonds. And then in the 1980s, that lovely lady who I met recently, and some of you might think she's lovely, but there you go, privatized these things, and that made me realize trading and momentum trading, short-term trading, was the way to go. And it helped me pay my way through university, because you could be in and out. You weren't holding forever, you know, like most students and people. I wanted the money quick. After I left the bar, on the advice of my family, I trained as a barrister, had a proper, respectable profession, but I left after qualifying in order to trade full-time. And the reason is because things like this is next. And you can see it just kept on, you're trading stocks like this and have these nice smooth trends that just keep on going up and up and up. I was making more money from trading by that stage than I was in the law. And you can imagine if you're making more than you are as a barrister, then you really should look at doing whatever else it is that's making you more money. And that's what I did. I left to trade on my own. But I realized that if I was going to trade on my own, I better mimic the best to get even better. So how do I access the best in the world? Well, I said to the Financial Times, I'm going to get you the world's leading traders and their strategies. So lessons in trading strategy from the world's leading traders, and that's the FT there. If you publish the book, and I said to the world's leading traders, if you agree to give me your strategies, I will put it in a book. And it worked. And the FT gave me a column off the back of it. And who were these people? Well, the people I interviewed were people like Bill Lipschutz, who was global head of foreign exchange at Salomon Smith Barney, and the chairman, by the way, at that time was a certain Mr. Warren Buffett. So this is the kind of people whose investment strategies we were looking at and getting even better, and that's, as I say, how I discovered my dream that this is what I wanted to do. I wanted to trade. So let's get into the trading rules. Why do I like momentum trading? What is it? Well, it's this. It's making sure when the market falls, you're making a profit. When it rises, you're making a profit, so that you're not just buying and holding, and after a very long period of time, ending up where you started. That's the whole point with it. The other thing about momentum trading is you're in and out. You're toe dipping, in and out, in and out, in and out. You're not held hostage to market crashes. And you no longer need to be at a bank. You don't need all these screens anymore because, as I'm going to show you, we've got all that data. And most of you know how to get that data already. And this is the critical factor for me. This is why I'm doing the webinars, because so much can now be automated. We don't need to do all what I need to do, all that difficult analysis and interpretation all the time sitting in front of the screen constantly. Because as we do with most things in life, we get the computers to do all the heavy lifting for us. But it also means I don't need to follow the news constantly and try and second guess it because I've got, as I'm going to show you, my entry and exit signals and my money management rules. But the other reason, or the main reason I liked it, because obviously having started an asset management company, was I saw companies like Winton Capital generate huge amounts of returns over a period of time, and it was aspirational. The sky was the limit. We could aspire not just to make a little bit, but a lot if we so desired. And that's why I wanted to get into it. So why do I think the FTSE 100 is particularly attractive? I'm going to talk about the FTSE. Well, normally it's a 1-point spread. Even when the market's illiquid, you're only looking at a 2-point bid offer spread, which means the cost of trading are very low. Think of it, for those who haven't traded, think of it as when you go exchange currency at the airport with Thomas Cook. The difference between the buy and the sell, you want that to be as narrow as possible. What I like about it, it's large and liquid, FTSE 100. So there's no manipulation, or very little, next to none. In fact, unlike, say, a small penny stock or something like that. And I should say this is being recorded, but as you'll see a little bit later on, you'll have an incentive to continue watching it live. It's being recorded, and I will make sure everyone who misses it does get a chance to see it. Large and liquid, so you also get the tight bid-ask spread as well, as opposed to just lack of manipulation. Large intraday price swings happen in the FTSE 100. Price swings means money opportunities, low initial capital requirements. You can be, with your spread betting, as little as £1 a point on this. So imagine if you're trading with £1 a point. That means even a £40 move is only risking you about £40. Lower risk than buying and holding stocks, as I mentioned, because you're getting in and out. You're getting in and out. You're not holding and just being held hostage. And it's just as easy to trade short as long. In other words, to profit from a falling market as rising, as most of you will know. And you only have to study one index instead of hundreds and hundreds of stocks as well. And most brokers do not charge commission anymore. That's gone the way of the dodo. And the market's open daily from 0800 to 2100 because it's the FTSE future that we're talking about as well. So that makes life a lot easier there. So continuing onwards, low entry barriers. This is new. I couldn't say this 10 years ago now. I'm going to show you where you get the free platforms if you don't already have it. Use whichever broker you want with the techniques I'm going to show you, but in case you don't have one, I'll show you where you get the free platform as well. See, for me, the realization was technology. We needed to use
as most of us have in everything else, to make this easier. The other realization was I want to access markets beyond 9 to 5 because, you know, we want to trade whenever we want to trade, and that gives more opportunities. The other realization, as I say, when I met the world's leading traders was this, and this is the most important realization of all. I looked at the number of months these traders generated losses and the percentage of losses. So what was the number of months in which they generated 0 to 1% loss, or 1 to 2, or 2 to 3, or 3 to 4? And what I discovered was it looked like this. There were quite a lot of months where they had small 0 to 1% losses. Yeah, so that's a lot of months where they have 0 to 1% loss. And a lot of months where they had 1 to 2%. In other words, they had lots of losses, but they are small. So I thought, right, okay, I need to know how to make these losses small, keep my losses small. That was the first big thing. The next big realization was they did have lots of small gains. They had lots of months, 40 odd there, where the gains were 0 to 1%, 1 to 2, 2 to 3, 3 to 4. But interestingly, they had a few big wins. So I needed to work out, how do you get these big wins? How do you make your profits run that you get the big wins? Of course, we'd all like a world where we had no losses and only big wins. It doesn't work like that. So I knew, by the way, this chart is the chart from Bill Lipschutz, the guy I showed you earlier, head of foreign exchange at Salomon Smith Barney under Warren Buffett. This is what it looks like in combination. Lots of losses, but they're small. Lots of gains, and a few big wins. So the system I've got to show you, my one, which is accurate, as you've seen, because the FT had validated it, had a few big wins. How do I get those big wins? How do I make sure the losses are small? And even though there's lots of them, they remain small. Because the other realization was then that when you did that month in, month out, you ended up actually doing rather well. Even though you had all these losses, you ended up growing 1,000 into 15,000, even though the percentage of months when you were profitable was only slightly over half. You're only profitable half the time. Wait a minute, you're only profitable half the time, but you got a 15-fold increase? How is that? If you're only right half the time. The reason is because when you were right, you had some very big wins. How do we do that? How do we do that? That's what I'm going to show you. That's what's important. This is in my own hedge fund. When we launched it in 2005, we did all of our analysis up to that point before we went live, and we put all our gains in order. We just ranked them. And as you can see, most importantly, with any sort of trading, you've got hopefully a load more wins than you have losses. So you've got fewer losses, and your worst losses are smaller than your best gains. But also, put another way, on average, what should happen, I'm going to show you with my system, this does happen. On average, you should have, this is over a 12-month period in our first year of trading, your average monthly gains should be bigger than your average monthly losses. So the months where you lost should be smaller than the months when you gained as well, hopefully. So all of these little tiny nuances you learn about as you become a professional trader, but you don't often think about as a private investor, and you don't need to, because I'm going to show you through a systematic approach how to generate this anyway. The other realization then became, there's all these tools available which previously were only available to institutional traders and fund managers. They're all available to the public nowadays, and that's what I wanted to get across. And I knew this was happening successfully and people were making money, because then I'd read things like, as I did this in July 2012, where you had one trader who made £1 million, and the average top 10 traders at one particular spread betting firm made $500,000 each, and so on. So we knew this could be done, and people could make those kind of stupendous returns. So let me first of all start off with trading platforms. All trading platforms are the same. This one's a free one that I happen to use, MT4. You'll have heard of it, and I use it for FTSE 100 trading as well. But you don't have to. You can use your own platforms. Whatever you're comfortable with, go with it. Obviously, for those who are not familiar with it, very simple. A is where you'll see all the indices and symbols. You double-click on those, and you get to point B, which is a price chart of that, and you see point C, which is where you put the timelines on. Here we've clicked on D1 for daily, and that's the daily chart. because it's not hard. Online trading platforms, I said, are free. Markets are open 24/6, well, certainly with FTSE 100 futures, and there's low cost because there's no commissions, and these rules are easy to follow. So given that's the case, why would we not be doing this? Why would people not be doing this? Using tracking platforms such as MT4, easy as ABC, because A is this, you can see the symbol there. B is then the price chart, and C, as you can see, is where you click the timeline. And when you double click on any of these, you get the buy and sell tickets. You buy high, sell low if you want to make a loss, and you buy low and sell high if you want to make a profit. Really simple. Yeah, buy, sell. You're buying that price, saying that we all know this. Give me the buy and sell signals, Alpesh. I'm going to do it now. My momentum trading system explained. It's been used for decades, by the way, by all of these people. Momentum trading. Each one of these is a momentum trader. You can Google any one of their names. They're all incredibly famous, and this is how they've made their money. It's all been on momentum trading, and so I'm going to show you momentum trading, which essentially is simply if something has kicked off, it's going to continue. Okay, how? Well, I said here's a recent trade, and you can see the time taken on the upside. You can see the time taken on the downside, and you can see kinds of returns, £480 in 2 hours if you're betting £20 a point, and £1,000 in 3.5. So how do we get that kind of momentum? Like I said, it's a trend. It's following those trends. You're all familiar with this, yeah? Open, high, low, close bar, okay? Each one of those bars, it could be 1 minute, could be 5 minutes, 10 minutes. I won't keep it as simple as this going forward. It's just in case people aren't aware. One thing I wanted to get across is the range. So that's the range. The range is high to low for any given period. This is what the high, low bar looks like. Okay, momentum trading, very simple, of course. You need a signal, which is what I'm going to give you, which gets you in just before a trend is about to start. You need something which tells you, okay, at this point, buy as soon as the price goes higher, and that has to be accurate enough to move the price go up, to see the price go up. That's what it is. Okay, that's as simple as that. So what is that signal? This is what it looks like. You're following trends. Got it? Obviously, we've got it. So how do you tell which direction the price will move? Let me explain the underlying philosophy of my signal, buy and sell signal, before I give it to you, because I could just give you the buy and sell signal, but it's better that I explain it to you so you understand it. We can tell when a price is going to move higher when it closes near the high. Okay, if a price in each period closes near the high, that means there's lots of momentum because people are pushing that price higher and higher. Okay, and how do you identify momentum? Well, higher price each period, and it closes near the high of that period. So not only does the price as a whole move up and up and up, which everybody can tell, and it's obvious, but it keeps closing near its high for that period. Okay, how do you identify a stall in momentum? The opposite happens. The price closes near the low, even if it's a rising price. So there you've got the price. That's on day one. Yeah. Then you got the price on day two. Okay, and it's closed near the low. Notice how it's closed near the low. See, it's closed near the low, even though the price has actually moved up. On the second day, it's closed near the low for that period. Price closed near the low. Price rising from one period to the next, but closed near the low. That's how you tell. How to measure the strength of momentum, measure distance of close price from high price, measure daily price rise, measure how many periods have risen. To do this, I use an indicator which many people are familiar with, but I use it very differently to how you've ever seen in any textbook. And I'm going to give you the buy and sell signals based on that. That's what the indicator looks like. You don't need to even know that. Don't worry about it. You don't need to know. It's just so you know that I know it. Okay? And the MACD is the moving average convergence divergence. Nothing special. It's in textbooks, but I use it differently. I've created my own modified system, which I'm going to give you. A rising MACD, let me tell you a bit about the MACD. So in the lower window here, you can see the MACD. It's this red line. It's rising. A rising MACD tells me a trend will continue with momentum. We know that. That's simple. This is the MACD. Indicator starting to rise, showing price line will. Now I say it's rising, or I say it's positive. Momentum. Okay, how do I use it? Well, time-tested custom modifications, proven to work across several markets, thousands in profits made, perfected over 15 years of development. What's the buy signal? This is it. Pay attention. This is my buy signal. What I learned and how I was accurate for the FT and so on. momentum in this time frame and the next time frame should not be negative. So in other words, as you can see, the momentum is rising. It's up in this time frame. This time frame happened to be 4 hours. When it's 4 hours, the next time frame is 1 day. If it's 5 minutes, then it's 15 minutes. If it's 15 minutes, then it's 30 minutes is the next time frame. And 4 hours is 1 day. 1 day, next time frame is 1 week. The momentum should be flat or rising in both time frames. Okay? Momentum this and the next time frame is not negative, is the way to put it. You can see MACD is not negative in this time. In other words, it's flat or rising. The MACD. If you want to know what it looks like when it's negative, it's this. You see how it's falling? That's negative. Okay, that's flat and that's rising. So as soon as it starts rising in this time frame, the 4 hour, and because we're looking at the 4 hour, also the 1 day, so whatever time frame we're looking at and the next one, that's the first thing I look for. The next thing is I confirm the buy signal. You only buy if after that has happened, the price makes a 2-period high. So 2-period high, it's where it's the highest it's been for 1-2 periods. See, at that point, in the next period, it made 2-period high, highest it's been for 2 periods. I'll go over this again in a second, so don't worry, I'm going to go over it. What about when to exit a trade? When do you exit? Well, when momentum is lost. The MACD is flat or falling. You close out half your position. If the MACD is flat or falling in either time frame, you close out 50% when the price makes a 2-period low, as it did there, indicated by the pink cross. 2-period low. See, it's the lowest it's been in 2 periods, and here by the red cross, when it makes a 3-period low, you exit the remainder of the position. You can see an example here where it gives you a buy and sell signal. Okay, and you exit in stages. You can see there as exiting. So I've given you lots of examples previously anyway. I'll give you some more in a moment. Why do you do 50-50? And what about a stop loss? You do 50-50 because at least if the market then rises, you've got half the position in there. And if it falls, continues to fall, at least you exited half. So it hedges your bet. So that's how you do it. And what about the stop loss? Well, I'm going to come to stop losses in a second, because to some extent, as you can see, they're built into the system. Because when the market loses momentum, you're going to get an exit. That's your stop loss. But I'll explain stop losses independently of that and what some of the world's leading traders taught me about that and how to run your profits, because that's where I've got about, as I say, 50 new slides coming up on that section. I'll give you more examples as well. And by the way, the opposite of the rules I gave you, that's what is for sell signals as it is for buy. So, you know, either way in the direction of the market. But don't worry, I'm going to go through it. I'm going to go through it. Profit potential of all of this, well, you can see there. And I will go through these rules again. You can see the entry at that point. And it's the UK 5-minute chart there from a couple of days ago, FTSE 100. And you can see where we sold and you can see where we bought back. So we sold at 65.27, bought at 64.94. The spread was 2 pips. Profit at £10 per point, £310 in 3.5 hours. Of course, you didn't have to do £10 a point. Could have been £100 a point. How do we decide the bet size? I'll come to that in a second as well. And this if we didn't add to increased position, if we didn't add to them at these points, and maybe some of the additions would have been break even. We might not have made money, but maybe on some of them we did. And I'll have to show you how you decide when to add positions and when to exit them. So you would look to increase that by about 50 to 100%. Because of adding multiple positions as you get into a winning trade. How do you do that? I will show you. Another example, FTSE 100 daily. This is the daily chart up until recently, entry 60.10. You can see there, and the exit at 63.05. By the way, at the moment, I've got a buy signal on the daily, so I would be happy, despite recent falls, to continue being long on that. And in 3 months, you're making 5,860. So different time frames, you're diversifying across, even though it's FTSE 100, and you might be trading the 5-minute, the 15-minute, and the 1 day independently of each other. Okay, so how do I develop the system? And I'll go through the rules all over again in a second, and stop losses, and specifically how to make profits run in 1 second. Well, thousands of live trades, of course, 20 odd years of working with the world's leading traders, 16 books to perfect this kind of stuff, working with other traders to optimize accuracy, and been using this since 95 when I left the bar to trade full time. Use this on currencies and on on indices, and those, as I've said to people before, one amazing period we had where we just kept on getting it right, my team and I, where 454 trades, we were actually just newly testing this on spread betting accounts to see if we could carry it across from futures market into that, and we had a pretty convincing yes on that, across multiple time frames, across Forex and indices, and some commodity trades I should mention as well, using the basic underlying engine that I've already showed you, where we had this many trades. These were the individual profits for each. As you can see, one of them was £500, and we got the vast majority of them. It's purple period. I mean, it's not always going to be that accurate. I wouldn't. By the way, this I would expect to be profitable even if it's right only half the time, and I'll explain why in a second. So give me 1 second while I explain all of this. Now, where do other systems go wrong, and why is this accurate? Well, A, B, C. A, their entry is too late or too early. So how do we avoid that? B, their stop losses get hit too often and cost too much. How do we avoid that? C, they do not know how to run profit. How do we avoid that? That's the next part. This is what I want to teach you right now. A, B, C. Where other systems go wrong? Well, obviously we know they get in too early and then the price still falls, or they get in too late and the bulk of the move's gone. How do we get good timing? That's what you need to know. How I get good timing is mine's what I call triple filtered, okay, MCQ. I love letters and abbreviations and acronyms. So MCQ, which is this. Filter 1, I measure the momentum to ensure consistent buy signals on, let's say, hourly, daily, weekly charts to give it the best time signal. So if I'm looking at the daily, then I'll look at the daily and the weekly. If I'm looking at the 4 hour, then it's 4 hour and daily. Okay, if I'm looking at the 1 hour, it's the 1 hour and 4 hour. Just those are the pairs. Okay, and I'm measuring the momentum to ensure it is consistent. It is either flat or rising in both time frames. Okay, that's filter 1. Filter 2, I confirm momentum across multiple time frames. So I look at it in this time frame and the next one. So if it's 1 day, and 1 week. All right? How do I avoid false entries? Filter 3, Q, I qualify the momentum indicator to make sure that the price then makes a 2-period high. If the price doesn't do that, even if the momentum was rising, then I'm not going to get in. Because a 2-period high, without qualification of price, it's just a false breakout. It's a false signal. It's just technicals. Yeah? Where other systems go wrong? Remember I said ABC. Stop losses. They don't know how to do stop losses. Look, we've got to make sure we've got a system where, yeah, of course we're going to have losses, but the losses got to be small. See that? We got in here, we had a buy signal, we had a sell signal, but there's a small loss. It even ate all the gains and then came all the way back, and we only got, okay, fine. Life's like that. Doesn't matter. It's a small loss. Better a small loss. Remember, we're going to get losses. Better that they're small thanks to our system than that they're big. Remember what I said? Small losses. As long as the losses are small, I don't have a problem. How do we ensure that we get, as you see here, those profits to run, those stop losses not getting hit but being accurate and protecting us from the downside, so we get more like that? Well, the key thing is actually learn to love your small losses. The trouble with a loss is not only the loss of money, but also loss of ego. Pat Arbor, chairman of the Chicago Board of Trade, world's largest derivatives exchange, said that. And the problem with most people is they go, it's only right 6 times out of 10. It's only right 5 times out of 10. A professional trader would never say that. A professional trader would say, how much money does it make? How much money does it make? Not, it's only right 5 times out of 10. It's only right 6 times out of 10. How much money it makes is what's important, because we're here to make money. Simple as that. Professionals know money management. Never risk. And I'm going to go through this now in detail with specific numbers. Never risk more than 2 to 3%, ideally 1% of your risk capital. What does that mean? Okay, let me explain. If you had in your system 5 consecutive losing trades and you only lost 2% on each one, you'd be down 10% after those 5. Most people risk about 10% per trade and are down 50%. So let me explain it in real simple terms of math so you can apply it. Assume you had a 40 pip or 40 point stop loss. I'll explain how you work out what your stop loss should be in a minute, but just assume this for the second. Then it should equal 2% of your risk capital. If our risk capital is £100,000, then 2% is £2,000. Therefore, 40 pips should equal £2,000. So 1 pip should cost you £50. So if it's a spread bet, you say £50 a point. One lot contract is £10 a point, so on standard 1 to 100 leverage, so we must want 5 lots or £50 a point. That's how you work it out. But that doesn't answer the question, why did you come to 40 pips stop loss? I'll come to that. My stop loss method is a variation on average true range. You'll come across ATR, average true range. My stop loss is 2 times ATR, fixed at entry. Fixed at entry. Okay? Why is that fixed at entry, and how do I come to that? So I've got my other exit rules, but the fixed at entry. So I know I will never lose more than 2% of my total profit, and that will be 2 times the average true range. What is this average true range? There's a couple of ways of finding it. One is, when you look on your software, your free software, you will always see those indicators. You put them in, and they'll show the average true range. They'll tell you what it is. But what is it? Well, it's this daily range averaged out over the past, say, 14 periods. I tend to look by eye, actually. I don't look at these indicators. I look by eye and I say, roughly, because it has to be rough. If your system requires you to be right, whether you're accurate to the nth decimal place, then it means it's not a very good system. It's probably pure luck. It has to be robust. So I look and see, can I still make money if I just estimate what my range is each day? And I say, well, my range roughly looks like, for argument's sake, 20 pips. Therefore, 2 times 20 is 40. Therefore, my stop loss at entry has to be 40 points below my entry. Okay? That's how I do it. If you think about it, it has to be by eye. Who's got the time to decimate all of this stuff? So where do you put that initial fixed loss? Because now you know that 2 times ATR will always be 2%. You might put it at 3 times average true range from your entry. By the way, I know this question coming through. I'll answer these at the end. Some of them might get answered in the new slides coming through anyway. Okay, whatever it is, however far you put it, you won't suffer more than 2% because you'll just change your trade size, so you only ever suffer at most 2%. You see what I mean? Let's say you put the average, you put your stop loss at 2 ATR, which means it's there, 2 times average true range, or 3 times ATR, because you said, no, I don't want it to get hit too easily. That's fine. If the ATR was, take my word, let's make the assumption 25 points, that was the true range. 2 times it means 50 points, so you can see where we've put 2 ATR, which is 50 points away. 3 must mean 75 points. Okay, so that's 75 points. Got it? Now assume your total risk capital is 100,000. 2% of 100k is 2k. 2 times ATR is 50 pips, as we already said. That means it must be £40 per pip. Because if it was hit, that we know is 50 pips. Yeah? And 50 pips has to equal £2,000. Therefore, it must be £40 per pip, because 40 times 50 is 200. And if you put it further down, then you must be betting £27 per pip. Because you're still only ever going to lose 2%, I said. It's very important. No more than 2%. Loss is 2%. Trading capital, whether falls to 2 or 3. Got it? Don't worry, I've got more videos on this on alpeshpatel.com, which goes into all of this in more detail. So which stop loss? Well, the reason you might use 2 is because you don't want to be hit too often. And the reason you use 3... Sorry, the reason you use 2 is because when you're right, you want to make more money because your trade sizes are bigger. And the reason you use 3 is you don't want to be hit too often. Mine tends, in the end, it tends to be somewhere between these two. Most of the time I've looked back and realized it's mostly about 2.5-ish approximately. Win-loss ratio is higher if it's 3 ATR because you're obviously going to win more trades as you get stopped out. But the profits are lower on the wins because you're trading a smaller size, remember. Isn't that clever? This is very clever because it protects your downside and shows you the interrelationship between win-loss and overall profitability in trading. So there you see another example of how the obvious is. Let me see what's happened and whether... can everybody still hear me? I'm just going to check. Just holler if you can hear me. Sound back, it says. Yes, sound good, 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 good. Sorry about that. I'm not quite sure what happened. It's very unusual for me to have a, thanks very much everyone, thank you, I've got to get all. So let me show you the third thing, ABC. I said what other people don't, they don't run profits. It's incredibly, incredibly important. It's not just me saying it. It's Bill Litcher, it's the world's leading traders telling you, how do you decide when to buy more in the middle of a winning trade? Trust me, trading is obvious, and let me show you. This is what people don't show. This is what they never end up showing people. You can run your, once you've got your system, your buy and exit signals, your think of it like the walls of a house. Once you've got that, one way you can buy additional units, one way that I actually end up using to buy additional units is I just look to see, is it exceeding the previous period's high? When I'm in the middle of a trade, okay, I've already bought my initial one. These are all additional ones I'm going to talk about. Oh, it's beaten the previous trade. Wow, the price has just gone above the previous one. Buy another unit. Buy another unit. At the same value, so whatever, £40 a point, whatever, at the same value. And I'll exit it when it makes a one-period low, or it looks like, okay, this is not going to continue now. Look, see, it's not continued. Now start getting worried. Take some money off the table. Just the additional, I'm only talking additional units. What's really important for you to understand here is, wait a minute, Alpesh, you've just gone from having 2% risk to having 4 extra positions. You've got 5 positions on that. Well, of course, but for these additional units, remember, I've moved my stop loss up. My stop loss is so tight. It's basically if it goes below that period's low. That's one. Sell each time it exceeds previous period low. Very tight stop loss. At worst, I'll have got in and out and made no money. Or I might have lost 1 pip or 2 pips. So be it. But look at the ones I can gain. I'm looking to overall increase my profits from just having, if I only had 1 position, by having these additional ones, to buy 50 to 100% of the profits I might otherwise have made. That is important. Okay? It's an art? No, it's not. It's obvious what you do. Add additional positions based on, look, this is an example from earlier today, an actual live trade. Okay, UK FTSE 100 5-minute chart. Got the sell signal there. You add more positions as you see the price moving quickly. In the period, if it moves quickly, then it's going to be a long streak here, yeah? It's going to be bigger because it means it's moved a lot within a short space of time. That's speed. Speed suggests momentum. Momentum suggests it's going to continue. You don't get something moving really down quickly and then really back up again. So you add to that position, add to the position, but you keep the stop losses really tight. You might say a 1-period low. If you're very confident, you say 2-period low. If you're watching it like a hawk, this is when you, by the way, watch it like a hawk. You can't do this and go to work because it's a 5-minute chart. You could do this on a 1-day chart and go to work, but you can't do it on a 5-minute chart, obviously. So how do you choose which chart? Well, if you're going to have a day job, choose a 1-day chart. If you're not going to have a day job, or if you come home from work in the evening, which most people do, they come home, they might do a couple of hours of trading, or even 1 hour of trading. Do the 5-minute chart then, and the 1-minute chart. Focus on those, and bang, this is where you make the money. That's where the killing is, okay? Moving consistently in your original direction, price moves quickly, and you get out as soon as you start getting a bit scared. Look at how quickly it dropped there. That's when you know. You have your order already open on screen. Sell it, 1 at a position. Get ready to buy. These are the additional positions I'm talking about. Additional positions. Additional positions. This is what it looks like if you're not adding any additional positions. This is your baseline. Okay, we entered there, $3,000 stake. That was the profit in 1 week, but we didn't add to our position as it fell, okay? Run your profits, add to your position. What's the other method? The other method is not just when it makes a new high relative to the previous period. You add to the same position every time it adds 0.5 or 1 ATR interval move from the initial, okay? Here's an example. Let's say your ATR, average true range, was 1.2. I've just picked random numbers. First position that was entered, assume at 28.30. Second position must be 28.30 plus a half of that. Half the ATR, 28.90. Set third position there. Okay? Got it? That. And then that. Yeah. Get there. Fourth position. So you add it at the ATR. If you do add additional position, then raise the initial 2 times ATR stop loss to be 2 times ATR from the latest entered position. Okay? That's again protecting your stop losses. It's protecting you from any big falls. An example, entry and stop. First was at 28.30. Your ATR, 2 times ATR was your initial stop loss. It was 25.90. Second position was 28.90. Yeah, so the stop became that. and so on. So the stop moves up and protects you every time. So which time frame? Well, in a way, all of them. 5 minutes if you're working out of hours, and longer one day if you're doing longer profit. Why? Well, those are the pros and cons. The number of opportunities are obviously better on the 5 minute, but the profits are going to be smaller. Yeah, individual trader, and the time taken is not necessarily great, but on the 1 day, time taken is fantastic. Individual profits are bigger, but there's fewer opportunities. Okay, costs and benefits, swings and roundabouts. But the beauty of making profits across time frames is this. This is the UK 100 on my signals. Okay, from 2003 to the crash around 2007, got out around there. Okay, so yeah, okay, I was 700 points off the market high, only 700. Some people got absolutely decimated during the credit crunch. I got only 700 profits off the high, but guess what? Look at when I got in. Got in 2003. This is on the monthly chart. That's why you do across time frames, because you want to trade not just the long time frame, but the shorter ones. Okay, we'll at least manage to capture a 2,000 point rise, a 50% rise, 2,000 point rise. Okay, off that system. Same system across different time frame. How good is that? What about sideways markets? Of course, you're going to get in at the top and out at the bottom. Damn, and it happened a couple of times. But these losses at least are not going to be too big, and you know what? The great thing about these is you're not going to add to these losers. You are not going to add to these losers, so the losses are even smaller as a result. And not only that, remember, you're not just trading across one time frame, in which case you might have nothing to show but a couple of losses. You're trading across multiple time frames and adding to your winners. So overall, it'll cancel out any of these losses that you've made. The most important thing is to make sure you've got the right buy entry and sell, so you can trade around that. Why is this so easy? Well, there's demo accounts. You can just practice making small losses all day long. Remember to love your small losses. These small losses are to be loved, to be exited. Do not get heartbroken and see big losses. With my system, you don't need to. So what are the realistic outlook of earnings? People ask me this. Okay, let's say we can capture 95 pips across a week, because you're going to look at several time frames, do it after work, and so on. £10 a pip, I'm being pretty conservative. £950 per week. That would be 3,800. That's what I want my students, my apprentices, to try and achieve. If they've got more money, remember the 2% rule, they trade bigger sizes. Why is this easy? Because even with the day job, as I said, you can do it. But look, don't quit your day job yet. Don't get over excited. Start quitting it until it becomes something consistent. Don't want you thinking that's going to be a picture of you quite yet. Winners, they add to winning positions. They exit losses quickly. They let profits run. They risk 1 to 2% of trade per trade. Losers add to losing positions. Okay, exit profits. Now, typical question I often get asked: how much do students have? When I say my students, these are my proverbial students. I'm not selling you a course or anything. People who are following the system. How much do they have? Remember what I said. You can only risk 2% of your risk capital. If you only got £10,000 risk capital, then 2% of that means on each trade you're only risking £200. If you're risking £200, then when you look at the stop losses, it has to be a stop loss of £200 per trade. Okay? And that will help you work out how many pounds per point, that would be based on the signals that I've already shown you. And you might then say to me, actually, Alpesh, you know what? That means I shouldn't be trading 5-minute charts. I should be trading 1-day charts or whatever and building it up. But £10,000 account should allow you to do £10 per point on the trades that I've shown you, given the stop loss sizes and distances being 2 times ATR. Okay, so 10K should be fine. You'll see in a minute what we actually recommend, which is even smaller. So that's the end. Okay, you've got everything. Well, it's almost the end. You've got pretty much everything. Before you ask, I do not do mentoring. I'm afraid, do tutoring. I don't do lecturing. I don't do internships. I don't do coaching. I don't do apprenticeships. I spelled that wrong. See why I don't do apprenticeships. I do, and I've just given you my and the world's leading traders' rules of trading, so you can be my apprentice automatically for free. If you want it even easier, you can have the program I use, which calculates all the buy and sell signals for me. That will also give you my free manual, which is over 100 pages now, my free videos too, and my free copy of the interview with Bill Lipschutz, who I mentioned. Okay, this is what we do. This is my ambition. We provide clear buy and sell signals to give you a proven, profitable system with trading manual of professional trader rules. By democratizing this know-how, we let the masses trade like us pros. Our mission is to make investing easier and more accessible for everyone. Because this is what people want. They want simple rules to profit. That's what I've given you. They want simplicity. They want expertise. They want insider information within the law. Well, I've just given you insider information. What top traders don't do anymore, let me tell you, they don't analyze each chart constantly. They have to analyze each time frame constantly. No, do they? They don't do that. They don't interpret each chart and whether it's keeping with their rules and the money manual rule. They don't do that anymore. What they do is get computers to do the hard work. They wait for exit and entry. The computer tells you to buy and sell. This is what they actually do. They calculate the position size based on their trading candle. Well, that they know. They only have to do that once. And they place the trade at the click of a button. Well, you're all familiar with this. I've already taught you this. The big thing I can really help you with is the computer can tell you when to buy and sell. You don't have to get the computer to do it. You can still do the hard work if you want. How can you apply the system? Well, I've got an indicator. I use the free MT4 trading platforms because they're free. Calculate momentum and trends to exit. Require no prior trading knowledge, and it's tried and tested on novices. I'll give an example. Okay, so this is UK 100 4-hour chart. Entry, exit, £15 per pip, 2,212 days. So that's what we did. Okay, this was one of the students and who also trades FX actually with us, and that was one of the trades off the back of it. By the way, this is the raw trade without the additional positions. So the additional position will depend on student to student on how frequently they're going to put those on. But like I said, it's pretty clear. You're going to start adding as soon as it starts making a high right to the next period. You start adding, and you should be looking to increase what would have been a raw gain by 50 to 100% by adding extra positions and exiting them pretty quickly if it goes in the other way. Student 2 over there, and you can see the calculations, 2,150, 8 hours in the first month of trading, who actually doesn't trade FX with us, only does the FTSE. And this is the FTSE 100 15-minute chart over there. So you've got the raw gain there, and then you've got the gains that are made by adding to the position as the price moves in the direction of your trade. And that should increase that by 50 to 100% every single time. Background of the students, this is taken from a recent Bloomberg talk I gave. Some are full-time mums, plumbers, professional traders, ex-professional traders, school teachers, and retirees. And why I like momentum trading? Because I told you can outperform the markets, maximize trading returns, profit from rising falling markets, and time those exits, and there isn't previous experience needed. My principles for all of this, for any system, I showed you MCQ, has to be reliable, has to be tested and proven, easy to follow and remember, and work in all markets, rewarding and profitable without any gambling, not with lots of losing trades just for a few big winning ones, but lots of winning trades as well. Now, the great thing about this is, why can everybody do all of this trading now? Why aren't more people doing it and spending more? All you need is a computer and internet connection, a free trading platform, free demo account, and following instructions. You've copied the top traders. I've just taught you that. It's all people do to avoid having this problem, this emotional stress problem. Remember I said it's about psychology. How do we make sure we have the right psychology for trading? Really simple. We have a system that I've given you. Can this be done automatically, such as electronic advisors, EAs you might have heard of, or robots? No, it's all BS. They're scams because they can't work in all currencies and indices and all the rest of it across all time frames. It's just across every single product. Because if it could, every single government would just invest in EAs and remove their deficit. Okay? Can it be done manually? Well, like I said, people used to do all this manually, but now they use computers. You can do this manually. Go ahead, be my guest. Because it's how I used to do it. I used to calculate manually every buy and sell signal, every entry point, examine multiple time frames. That's why I'm good at this stuff. You become a bloody expert when you have been spending that much time on it. And ensure your calculations are correct, and make sure you've got the discipline. I had to have the discipline, and I have got the discipline. Unfortunately, what happens to most traders is they forget it. They just get frantic because they don't have that lack of emotion that comes from having a good system. How do I do it? I programmed it. I programmed the rules I've just given you into a piece of software developed by me. So if you want to go the extra hog and have this piece of software, then do it. Because it's actually about the fact that we're not going to get what we want unless we start asking for stuff. I mean, credit crunch, market crash, jobs for life. This is why this whole innovation came about by me, because I kept getting people asking me about trading, and I realized this wasn't just people wanting to be greedy. Actually, this was people who just wanting to survive, and I felt I don't want them just to survive, I want them to thrive. You see all of this, and you realize there's demand for this. It's needed. It's requested, because I don't have, sadly, time for training workshops and seminars. And people copying my trades and following. I don't have time for it, or personal coaching and mentoring. I'm really sorry. Or as I say, training workshops. I'm really sorry. I don't have time for all that. So I thought, wait, automate it. And the same issues kept repeating. Why does it sometimes feel like the market's out to get me? I keep letting my losses run and cutting my profit short. What techniques do professional traders use? Some of the trades profitable. So I just thought, you know what? I'll automate it. So I did. So I've given you the signals, but if you want the software which produces them for you, then I did it. Simple to use momentum trading indicator, whether you're new to trading or advanced, help achieve those. On FTSE 100, I've got a separate one for FX, but I'm just talking about FTSE 100, and they're not interchangeable because they have different characteristics, those two markets. It takes about 10 minutes to install. And that's what it does, measures the momentum to highlight the trend, confirms the trend, identifies the direction, qualifies the price move, all done for you. Works on all the different market scenarios, everything done for you. And how do you use it? Well, it's on free signal software called MT4. Software is loaded on, gives you buy and sell signals like that. Really clear buy and sell signals. It's not a robot. You've got to place the trade through any broker you want, and the platform's free. What do you get? Lifetime license to it, to use on any of your computers, free copy of my Bill Lipschutz interview, free lifetime updates and access to my webinars, access to members area, which contains step-by-step video instructions, customer support for technical help via emails, invitation to all my future live events, and coming very soon, twice audio market views from me in your inbox every day. Requirements, like I said, just need a Mac or PC and an internet connection and a demo account. It doesn't have to be FX. MT4 does indices as well. And how much can you make? Well, I've given you some examples. We make sure you don't lose more than 2% because I've given you those rules. Trades can last 7 to 10 days to 7 to 10 hours, depending on the time frame you're looking at, and typical winning trades up to 100% return on the capital risk. How much all of this costs to develop? Well, 25 years of education, 15 years of practical life testing, thousands of trading hours in global markets, developing and using the system, and then using it to forecast on Bloomberg, BBC, CNBC, FT. Also, the other thing is nothing, I can give it away for free, but nothing free is ever valued by people. So I've made it as close as possible to free, because what I've said is I'm going to give you money back guarantee. 100% money back guarantee. If you do not make £2,000 trading live using the signals on this over the next 30 days, I'll give you the cost of the indicator back. If you don't make £2,000 over 30 days using it live, I'll give you the cost of it back. Okay? Here are 2 recent testimonials. Just thought you'd like to know. I purchased your momentum indicator, made £450 in the first trade, locked in on the second and third days, 1.2K. Dear Alpesh, also attended the webinar you hosted 3 weeks ago. Some of the Forex trading strategies, this was for the Forex indicator. This is the first time I'm launching the FTSE one, which I say is not interchangeable because they have different, slightly different criteria. Using those strategies, I've so far managed comfy 1,000 pips on both those currency pairs. So thank you so much. That's £10,000 in 20 days. That was a student actually, and he's taking his grandmother on a holiday. I kid you not. It was amazing when we got the email on that. Was my favourite one of all the ones I've got. How many licenses? 25. And the reason I do it in batches of 25, so there might be another launch. There might not. It just depends. It's just to ensure high quality management customer support. If you get emails, I'm teaching people, I'm doing webinars, and I don't want more apprentices than I can handle. Hey, listen, Lord Sugar only has 1 apprentice. What a wimp. I'm going to have 25 at a time on this. So there you go. First come, first serve. It's as simple as that for customer support. Just before I give you the link on how to order, let me just tell you what it's all meant for me, because I really am grateful. I set up an asset management company off the back of this indicator and launched a hedge fund and managed money. And that's Richard Branson in Abu Dhabi, Profinium's my company, by the way, in Abu Dhabi F1 about 2 years ago. It meant that I could do work for my country as a deal maker, for the British government, hence me with Vince Cable, meant I could do public service work by having this asset management company. To be with Nick Clegg, who's a patron of a charity of which I'm co-chairman called the Lumbar Trust, which looks after widows and orphans, and that's the Prince of Wales at Buckingham Palace thanking me because I'm a donor and sponsor of one of the Prince of Wales charities. And other charities that I work with is on the left-hand side, Commonwealth Memorial Gates, which commemorates the service of Commonwealth soldiers in the First and Second World Wars. John Major is a patron, and I'm a trustee of that, and that's at a reception for GEMS and Education charity based out of the Middle East, of which Bill Clinton is a trustee, and I was just a guest at a reception at the Ritz. So it's given me a lot, especially gives me the opportunity to have Jeremy Paxman on the back foot. So what's the link? Let's say 15 seconds if you want to make your life even easier without having the software side. That's it. First 25 are going to get it. alpeshpatel.com/get. And that, I've said, I'm going to refund that money back for anybody who doesn't make £2,000 in the first 30 days of trading live the signals. We have the signals as well, so we know on the FTSE 100. So there you go. 5 easy steps. Step 1, you go click on that link, you click add to cart, okay? Really simple. Second step, you make the payment. SW Reg is a big, fat, famous American payment processing company. So they process the payments, so you can trust them because they're big and American. Choose the currency. Obviously, I'm assuming most people will be sterling. You click on that delete bin thing there because you don't need the extended download service, so you can save yourself £12.75. SW Reg automatically put that on. You don't need it, so cross that out. That and all the rest of it self-evident. Once once it's been processed, now sometimes it goes to a blank screen. That usually means that the process has been rejected. Drop us an email if there's any problems, and we'll double check everything. Step 3, you download all of the things, not just the indicator, but all the software, the videos, the manual, everything that I've explained tonight. You get in ample quantity, so I want you to make sure you download all of that. If you have any problems with that, let me know, and we'll resend you that link. And then you load up the indicator, watch the videos which show you how to do that, and you follow the buy and sell signals. As simple as that. Step 5, follow the signals across timeframes which are suitable for you. Start small. Start small. Don't panic and think, oh, I've only got 30 days left. It's ample time. 2 more bonuses. If after 30 days and you make more than that £2,000, I will send you signed copies of my books. I know I'm behind on so many people sending these because I've not been able to get them quick enough from Financial Times and Wiley, but I will get them to you. So that's the link. First 25 people, so we can manage it. And as I say, I might do more with the FTSE 100. This is different to the FX one. I'm about to answer some questions in a second. And the idea is it's to make your trading easier. If you don't want it to be easy, if you want to do it the other way, that's of course entirely up to you. Look, guys, I'm just saying it made sense for us to do this given the amount of demand we've had. What do you need to know? You can use on any free MT4 trading platform. I use FXCM and suggest that because that's what we've tested it on. It varies from platform to platform. If there's any problems, I always say to people, go back to the FXCM one. Why do we choose FXCM? Because they're New York Stock Exchange listed as well. The indicator sits on your internet-connected PC. You can execute the signals using any broker, spread better or whatever, trading through the Mac, PC, smartphone, whatever you want to do. You can just use FXCM just for the signal. It's up to you. You can use the indicator for life, and we give free updates. It's tested to work in all market conditions. Takes up to no space on your computer. Free documentation, webinar, step-by-step, spoon-feeding. It's the quickest way to turn you into a full-time trader, I think, or second income part-time trader. It takes 10 minutes to load, gives you the signals. You don't need to buy anything else, and there's no hidden costs or fees or upsells or anything else. Got email and webinar support, and loads more videos, and pros and newbies are welcome. Keep a watch. What you've got to do, keep a watch on the buy and sell signals, place that initial stop loss, decide how much risk capital to trade with. We suggest at least $5,000 to trade with. Okay, step 1, to repeat, download the indicator and documents, read the documents, download the free trading platform, open the free demo or live account, load indicator onto the platform, start trading by following the signal. Get it? It's really straightforward. How much can you make? Well, you sometimes get people who try it and get shocked, as this gentleman did. So that's what you do. You go there and grab it, and I expect it will be gone very quickly. So listen, I'm really glad I was able to develop this kind of technology, thanks to technology that's come about. And it's really good. Why, people often ask me, why is it time limited? Well, popular demand, soak up historic demand. I only want serious apprentices. I like Lord Sugar. Yeah, this is a vetting process. I only want serious people, so I don't need to try and persuade people to do this. It's entirely up to them. So recap, download it, step-by-step training videos, one-time payment, lifetime updates, invitation to all my events in the UK, monthly market update, and training webinars, full customer support, and the 2 bonuses, which are the books. And that's where you go to get it. Instant download, full customer support, step-by-step instructions, and a 30-day money-back guarantee that I've already mentioned. Whoops. So that's the location. And, well, that's the basic opportunity. Join the community of traders. Come join us. Give yourself the opportunity for earning that second income and take that entrepreneurial step, like giving you the benefits that it's given me. And I hope you will join part of that. One more bonus. I'm going to do a 1-hour webinar on setting up your own FTSE regulated asset management company, because people have asked me about that as well. It's given that I went from one-man band into setting that up, they often ask me about that, so I want to do that as well and give them that. What I'm going to do now is answer some questions that I've been seeing. So give me a moment while I pull those questions up onto my screen. Right. Okay. I can only afford £150. Can I trade with it? No, you can't. £150 is too small. Will it conflict with MT4 indicator already on MT4, which uses Alpesh system for Forex? Yeah, what you've got to do is make sure you're using the correct one. So you would either operate on I mean, it's quite clear, but it won't conflict. You've just got to make sure you're using the correct one. That's all. A charts on MT4 demo not delayed by 15 minutes? No, they're not. Can you repeat the first question? Yes. The first question was, I can only afford £150. Can I trade with it? No, I don't recommend only trading with £150. It's too much. How does this system compare to somebody called Lee Sanford? I don't know who that is. You saw my credentials. I run a hedge fund, so I don't think Lee Sanford, whoever he is, does. So I'm going to stick my neck out and say I'm better. If the 1 hour, brilliant question, Dave. If the 1 hour MACD is down and the 4 hour is up, do you treat that as a fake signal? No, because what will actually happen is the system works that out for you. I don't need to look across the time frames. I only managed to catch the end of the webinar, Alpesh. Yes, it will. I will send this recording over to you. Alpesh, you're still the daddy. Thank you. I'm assuming that's not a parental claim. Is there not a 30-day limit to MT4 on FXCM? There is a 30-day demo limit on FXCM, but you know they don't mind you opening multiple accounts. So the reason they have that 30-day time limit, I should explain, is because otherwise they would end up constantly having to pay exchange fees, live data feeds to people, and they don't want to do that, so they automatically switch off if you haven't switched. Is this for FTSE only or US indices as well? No, just the FTSE. Fantastic. Looking forward to seeing the whole thing. Thanks, Stephen. Pays the price to see you use my testimonial, the longer testimonial on Euro, Dollar, and GP. Yes, thanks, Drew. I said I would, so I hope that's okay with you. Let me just scroll up more questions. Okay, so the system gives you buy signals, give you exit based on 50-50. I'm confused as how this is done. A software can't know what position you are in. As in an uptrend, there will be multiple entries. No, what happens, Andrew, is it's giving you the initial entry and the exit for that. The additional positions you put in based on the rules I've given you. So you put those additionals in, but it gives you the entry and exit of your initial and initial position. Can you please cover the entire criteria again? If not, no problem. I will listen, rerun. You need to, if you wouldn't mind listening to a rerun, we will make sure. Do you charge shipping costs? Billy notes, it's downloaded. It's just downloaded in the internet. Thanks to the internet age, everything's just changed. In the old days, we would ship stuff out. You don't need it shipped. You just click a button and download it. You start on it tonight as well. On that. What do you mean by trading live for 30 days? Please kindly clarify. Notice that means with actual money. With risk capital, So that's what trading live means. Use any broker you want, but what we're saying is do it properly. Show us that you're serious at least. And with risk, only ever trade with money you can afford to lose. Now, if you think that the money you can afford to lose is not enough, then don't ever trade with money you can't afford to risk. And so on. £2,000 account, you can only risk £40 per trade. Yeah, remember it's £2,000 profit. We're talking about two different things there. What is the 30-day rule? 30-day rule is really simple. If you don't make £2,000 trading the signals live across various time frames that I've mentioned, then we'll give you your money back. It's as simple as that. What size pot are students starting out with to achieve these earnings? It varies, Teresa, of course, as you can imagine, it's the obvious answer. But what we've got is some people are trading with as little as 5,000. I prefer, the more capital you have, the easier it is, because I ideally want people only risking 1% per trade. That's what I want. Stuff if the market gaps down. You're right. If the market gaps down, we've got to be really careful. And one way to avoid that is, avoid weekends, avoid, placing a trade just before the market's about to close. You don't want to place an open trade just before the market's about to close. So there's obvious ways of avoiding that. The best way to avoid market gaps is not to trade. Let me see. I can hear you now. Sound okay. Make sure. I think I've answered everything else. Loads of fantastic questions, so thank you for that. Aren't you buying breakouts each time you add the position? No, not necessarily breakouts. What time is Alpesh coming? Oh, that's odd. What size pot? Okay, I think when the software is, am I down limited to one machine? No, on all your machines. On all your machines. So that's fine. Alpesh, thanks, Kuldeep. You could be an honorary Gujarati. 50% off, please. I bought Trent. It's actually the lowest I could do it. A very simple reason. You see, we actually thought about just because I have given the rules for free. The signals are just there because it makes your life easier. But we thought the easiest way to make it as close to free as possible is two things. First of all, to charge something so people take it seriously. Otherwise, they don't value stuff if you give things away. But then to give them the money back, just to say, look, if you don't make 2,000, you're going to get your money back anyway. Many people have discouraged me from trading. I'm thinking that I can't succeed. How can I overcome this? Demo account. Do a demo account. That's how you can overcome it. That's probably the best way of overcoming your doubts. So don't just, and many people, by the way, are absolutely right to discourage you from trading, because trading is not a magic bullet for earning gazillions of pounds. It requires, I've showed you everything it requires. It requires the right knowledge to be applied. And what I try to do, because I give myself only 1.5 hours with these webinars, is make sure I convey that right knowledge in the shortest space of time so that you've got it. And that's it. Okay, guys, I'm going to have to run. I'm sure you all have to as well. Thank you all so much for listening to this. And as I say, the account that we suggest, FXCM, we've got a direct link to that as well, which is shown over here, alpeshpatel.com live, which you can open the account through there as well. And that way we monitor it, but you don't have to trade through us. You can trade through any other broker you wish as well. Thanks very much. My pleasure. Okay, thanks everybody. Thank you all.